Coinbase just shed roughly $5 billion in market cap in a single session, and every headline is going to tell you the same thing. Earnings miss. That answer is too easy, and honestly, it misses the bigger story that broke literally one day before the print. Because while traders were dumping coin over a 6% drop, Coinbase quietly took over the stablecoin plumbing of one of the fastest growing exchanges in crypto. So before you assume the bears are right, stay with me. By the end of this, we're going to do something nobody on finance Twitter is doing. We're going to follow the money instead of the headline. Let's start with what actually happened on the tape. Coin closed at $199 and change, down 6% on the day. For context, the stock was still up about 14% over the last 30 days going into this print. So the move you saw today wiped out a chunk of that run, but it didn't break the trend. This is a pullback, not a collapse. Important distinction. The trigger was the earnings release. Coinbase missed on the bottom line and posted what Decrypt called a surprise loss, meaning the street wasn't pricing it in. And when a high beta name like Coin surprises to the downside, sellers don't read the footnotes. They just hit the bid. Now here's the part the headline buries. Trading revenue was soft, yes. That's the cyclical piece, and that's what missed. But subscription and services kept scaling, aggressively. This is the same playbook every mature exchange has tried to run. Get off the trading fee treadmill, build recurring revenue, stop being a leveraged bet on retail volume. And Coinbase is the only US-listed name that's actually executing on it at scale. So when you see a 6% print, you have to ask, is the market reacting to the part of the business that's declining or the part that's becoming the real engine? It's the wrong part. Which brings us to yesterday. On May 14th, Hyperliquid, the decentralized exchange that has been quietly eating CEX perpetual swap volume all year, announced it's sunsetting its native USDH stablecoin. USDC is moving in to replace it, and the entity managing that USDC treasury role on Hyperliquid is Coinbase. Read that again, because nobody is pricing this in. Every dollar of demand for USD peg trading on Hyperliquid now flows through Coinbase managed reserves. Hyperliquid keeps most of the reserve yield revenue per the deal, but Coinbase gets the franchise, the relationship, the rails, and the fee exposure on every fast-growing DeFi exchange that wants the same plug-and-play stablecoin setup next. And here's the kicker. Ethereum has been losing DeFi market share for a year, down from 63.5% of total value locked at the start of 2025 to around 54% in May. Where did that share go? To Solana, to Base, and to Hyperliquid. Base is Coinbase's own L2, and now Hyperliquid's stablecoin layer is Coinbase 2. So while you're being told this is a crypto company having a bad print, the company is actually positioning itself to monetize the migration off Ethereum, regardless of which chain wins. That's not a company that lost today. That's a company that just paid for optionality with a one-day stock move. And there's a regulatory tailwind nobody's talking about either. The Senate Banking Committee marked up the Clarity Act on May 14th. Brian Armstrong has been arguing that this version is the workable compromise, the one that actually gives U.S. crypto firms a clear operating framework. If that bill moves, Coinbase is the single biggest beneficiary on the listed side. There's no real public market alternative at the scale. So here's the breakdown. Short-term, Coin is a high beta name that just printed a soft trading quarter, so a 6% flush makes sense. Medium-term, the recurring revenue side of the business is doing exactly what bulls hoped, and the Hyperliquid deal extends that runway into the fastest-growing corner of crypto. Long-term, Coinbase is becoming the USDC layer for crypto rails the way Visa is for card rails. The market hasn't repriced for that yet. The earnings miss is what filled the front page today. The Hyperliquid stablecoin handoff is what people will remember in 6 months. If you want more breakdowns like this one, you know what to do.